Well, good morning, traders and investors. My name is Roger Scott, and I'm the head trader for Wealth Press. Today is Monday. It's December the 14th. December is halfway over. We literally have a week before Christmas, and I'm going to ask you this question. Where in the world has this year gone? I actually have no idea where this year has gone. Anything after February is like a black hole. But anyways, we are here looking at the futures market, and we're going to talk about the conditions of the market, and I'm going to give you two low-risk, high-probability trades. So we got a lot to talk about. Don't go anywhere. Let's start with the futures. NASDAQ 100, we're up. Dow futures, we're up. It looks like we're going to bounce back pretty good before the opening bell. The biggest catalyst, the biggest positive catalyst this week is that vaccines are being rolled out. Now, in terms of the weekly focus, we don't have a lot of data today. Tomorrow we have FOMC beginning. That's going to dampen the market's liquidity and volatility. And we have industrial production. Industrial production is a very, very important report because if industrial production is not picking up, infrastructure development, which is one of the biggest things that we're going to look forward to over the next 4 years, is stagnant. So we need to see industrial production begin moving in the right direction, and then everything falls into place. That's a good indicator of commercial activity. We also have Wednesday retail sales report. This is a very, very good report to tell us how the GDP is going to do at the end of the quarter, because 2/3 of the GDP is made up from retail sales. I'm also very curious about the retail sales report because I believe this report is going to be very big. I think this report may set off what we know as the Christmas rally or not. Because think about it. The biggest rallies on past Christmas are due because there's strong retail sales. The problem is we won't know if the Thanksgiving sales were strong, if the actual store sales were strong, or online sales were strong, till we get this report. This could be very, very big because the previous retail report told us we were slowing down going into November from October. September and October was strong, but November looked like it was starting to cool off, and we got warning signs that the numbers may be lower than expected. Now, if you look at the expectations of this report, consensus is 0.3. That's bad. That's not good. That's not good at all. So let's see. Hopefully we can get the number, substantially better than -0.3. But again, success of Black Friday, we're going to see all this. That's what I want to see. Because if the numbers are a lot better than expected, we may see a surprise Christmas rally. I wouldn't hold my breath. I actually don't think we're going to see it, but it's possible. And this sales report is the one that's really, really instrumental. So because this is really the big one before the end of the year. We also have FOMC announcement and the chairman conference. We already know the Fed is not really going to do anything. They're going to leave rates where they're at. They're pretty much going to tell us how bad or good the conditions are, and they're going to talk about COVID, which is what I've been doing every day here. So you don't really have to listen to the Fed report. You could just listen to me. We've got jobless claims on Thursday, housing starts and permits, and Fed manufacturing index. Now, let me put some dots together for you. Industrial production and manufacturing, these two are going to be very important in terms of giving us clues of how industrial production and manufacturing is coming along. Jobless claims, well, last time you looked at the number, and the number was jumping back above 845,000. Consensus, 806,000. This is bad, folks. This is really, really bad. I'm going to remind you, this is the number we were having in March, April, and May. And look at the consensus. We're not even going to 600,000, dipping our toes. 720 is the low end and 915 is the high end. We're now going back to where we were prior to, March, April, May, when things were really rising. The moving average, the 4-week moving average is going higher. The initial claims change was positive 137. The number was bad. It wasn't even 845. It was 853. Excuse me, I made a mistake there. So again, the numbers are not positive, which leads me to believe the market could be in potential danger or drifty, especially, again, I'm going to show you this, and it's time to look at it because we did have a little cool off last week. Let's look at the number of stocks trading. Overall stock market, you've got 85% of stocks that are trading above $2, above the 200-day moving average. And look at the 50-day moving average. This is the broad market. Now let's look at the S&P. S&P, not bad, 75% cooling off, but 90. This is bad. Let's look at it really quickly. I want to look at it because we haven't looked at it in a few days. And yeah, this is bad. This is bad. Look at this. Let me show you. 10 years. Look at that. Have you seen us here? Look at this. This is 2011, March 2011. Just look at the date right here. Look at that. April 2011, December 2020. Folks, I'm not joking about this. Momentum levels are declining, which means it's harder for the market to generate the same amount of momentum to the upside. And look at this. This is the 50-day. We've already gone into the range. It looks like we're already going down. It looks like we can go further down. Let's do the same thing for the NASDAQ right now. Again, I'm telling you, we are in nosebleed territory right now. So let's look at the 200-day. This is NASDAQ 100. This is just the 100 NASDAQ stocks. Yeah. Ouch. Look at that. We are now, yep, right here. This is the last time we were here, February 2011. And again, that means you got to be careful, especially with large cap techs. And the 50-day, we're going down. Yeah. Folks, I'm telling you right now, imagine you have a car. It's driving 60 miles per hour, and it's got 6 cylinders. And now it's driving 60 miles per hour, but 2 of those cylinders break. And then imagine you're driving 2 miles per hour and 2 more cylinders break. The car has to work much harder. The engine has to work much harder to generate the same amount of momentum. That's what we are seeing now. Momentum levels are declining while markets are still higher. It's not a positive sign. And I showed you last week we had divergence on the S&P and the NASDAQ. So again, momentum levels are not pretty. Now, with that said, this is the price action on the NASDAQ 100. And as you could see here, nothing changed. We're still diverging. And if you look short term, I believe we're going to cool off. We may not cool off like completely and go into twilight zone, but I think we're going to hover around this area till we get more data from the Fed this week. For example, the big reports would be the retail sales and the jobless claims. Those are the big ones, jobless claims and retail sales. Industrial production as well, but the biggest ones, retail sale, jobless claims. Housing starts are probably going to be really, really solid. The housing market has been screaming, just screaming higher. So again, that's the case. So don't look for a major upside on the NASDAQ. Look for us to kind of glide, especially now entering this weekly news where we've got a lot of data, and typically markets don't make big moves prior to the FOMC. FOMC starts tomorrow. So I would be very, very cautious about these upsides in the market, especially in light of the momentum levels, especially in light of the fact that COVID situation is not as pretty as it was, that numbers are rising. Just let me give you a quick update of the global market here. Look at this. Investors, Britain, here's the big one here. Japan numbers are looking solid, by the way, which is very important. But here is what we're talking about. U.S. markets ended last week on a downbeat note. Benchmark pulled further away from their recent highs Friday as prospects of another aid package from Washington faded, while a surge in virus cases is threatening to inflict more damage. That's where we're at, folks. Investors are watching for updates on the rollout of COVID vaccines that might help beat back surging infections. And the first of many freezer packet COVID vaccines vials made their way to distribution sites. But widespread vaccination, pay attention. Widespread vaccination will take months, and the virus pandemic is prompting tighter restrictions on businesses. So you have these two factors. Like I said, is it going to be end of the world, figuratively speaking, or is the virus going to come and save the day? Is it going to be the end of the world, or is the virus going to come and save the day? That's kind of where we're at right now. But based on what I'm seeing, we're not going to get widespread vaccination till couple of months from now, and that's not positive for the NASDAQ, especially with the jobless claims numbers being low, with momentum levels being overbought. I would be very, very cautious with large cap and large cap techs. Very important. Now, I do have a couple of stocks for you today. Not this one. These are inside days. These are stocks that make all-time highs or swing highs, 90-day high, 50-day high, swing highs, and then cool off and stay near the high and have inside days, meaning the high and the low, The low is higher, the high is lower, and the low is higher than the previous 2 days. So these are like mini triangles. Let me show you what I mean. It's like a baby triangle. Don't you like that, baby triangle? Here we go. So these are good, and why I like inside days when markets cool off, because it's showing me stocks that are resilient. Also, this is not a tech stock. Sleep Number Corp. Look at the profile of the stocks. They make mattresses. They're in the Russell 2000, the index that is not diverging. Sleep Number makes mattresses. JD Power, very good rating. 1 year return, 67%. 5 year return, 274%. Household furnishings, people are buying homes. They're remodeling homes, not commercial real estate. Homes are doing really, really well right now. The housing market's doing well. When people buy new homes, move into new homes, they buy new mattresses. Come on, you guys know that. When I moved into my new home, I bought a new mattress. So, and it's in the Russell 2000, which is the only major sector that's not diverging. And remember my theory on it. It has more to go because it's been held back during the Trump administration due to the trade war. In fact, that Trump was tough on China. I've been saying that a couple of years now. Next stock, this one here, PerkinElmer. I know, and again, inside days here. Let me draw it for you, give you added value. Oops. Can't even draw. My Picasso days are over, folks. Trend line, there we go. Let's see if I could, yay, it worked. Let's see if I could do another one. There we go. See that minor triangle, which leads usually to the upside, and it's been holding well during the last few days when the market sagged. Now, what does PerkinElmer do? Let's take a look, right? Now, this is not a small cap. This is actually a large cap stock, but laboratory analytic instruments, industry, scientific, nothing to do with technology. Nothing to do with technology. They are a leader in committing innovation for healthcare world. Biden is going to be very pro-health. Diagnostics is big. Stock 1 year return, 58%, 5 year return, 187%. I like this company, and I like the fact that they're not a tech company. So again, just to give you some feedback, I'm looking to buy above this breakup right here and stop loss right below. So you buy if it trades above the blue line, you liquidate it if it sells below the blue line. And this one, Sleep Number, let's take a look. You'd buy it above the blue line right around the 84.50 level, and you liquidate it around the 79.80 level. PKI, you would buy above the 148 level, and you will liquidate it about the 142 level. So again, PKI and SNBR. Now, before I let you go, I got something important to tell you, and this is big, and I want you to pay attention. Really pay attention. I'm trying to help you here. Now, thanks to a mysterious event that occurs every Friday at 4:01 p.m. Eastern Time, a minute after the stock market closes, literally, a select group of traders have the opportunity to collect hundreds, potentially even thousands of dollars in profit every few days. Now, tell me who wouldn't love that. The kicker, most folks have absolutely no clue, zero clue that these phantom trades even exist. But live trade profit head, trader Josh Martinez and I we're ready to pull back the curtain on how to use this Friday after hours phenomena, this trading strategy phenomena that could triple your investment within the next 60 days. Folks, you don't want to miss this out. You really don't. This phenomena has the power to potentially hand you thousands of dollars in profits you've probably been missing out in your entire life. Folks, don't miss out on collecting hundreds, even potentially thousands of dollars in every few weeks, Click on the link below. Get in on this market-beating strategy. It's awesome. You're going to love it. Follow the link below. This phenomena literally has the power to potentially hand you thousands of dollars in profits that you've probably been missing your entire life. Don't do it. Check it out. Check it out now. Stop missing these profits. Get in on them. Do it now and have a great day. And leave me comments and feedback. That's how I know what you guys want to hear and listen to and pay attention to. Otherwise, I'll be talking about some nonsense forever. I'm just kidding. Have a great day, everyone. Bye.